video here. All right.
Okay.
Yeah, let's check US30 on intraday, because I am a swing trader, but sometimes if it needs be, if the opportunity is there and if I'm available, I do scalp, but I prefer the swing trades, right? So on intraday, I guess you understand these things now. It's positioning, it's swing, it's intraday, and then it's scalp. So now I want to show you something here on intraday setup, right? So now
Okay.
we have to understand why we have this swing high here. All right, let's start here. All right, let's start here. This is a stop hand. This is not a break of market structure. This is a wick here. It's not a candle, right? It is a stop hand. It is a stop hand. It is not a break of market structure. However, down
Yes.
here, all right, you were saying?
I said the other one is just a wick, not a break of structure, because the body didn't close above the previous candle.
Exactly. So this is just a stop hand here, right? And then this is a break of market structure here. All right. Yes. So now when you see things like this, I always say that we have to apply the technique of the stop hand, the entry technique of a stop hand. I think you've seen that yesterday. So all right, cool. No problem. So now, what is that technique of a stop hand? Is to use the candle that created the stop hand as an entry. This is your point of interest now here, right? This is your point of interest. This whole candle all the way to here. And then what do we have here? After price dropped and then price pushed back to this candle here, that was responsible for the stop hand, right? So what do we have in between? This is just inducement here. This is just inducement here. Here the market makers were just enticing you to come into the market while they did not reach the point exactly where they want to reverse the market. So this was just an inducement here. So in my videos again on YouTube, I think you saw where I speak about the breaker block. Now, this inducement here comes from this breaker block here. This inducement here was created because of this breaker block here, right? This inducement was created because of the breaker block. So this is our initial entry, and then this will be the second entry there, right? So now if you understand this on high time frame, and then you are done. Simple as that. You are done. You don't have to panic at all, right? So now the target, the entry was up here. So now before the entry here, what do we see? We see liquidity grab here. This is our stop hand here. Another stop hand, right? We see another stop hand, and then after that, what do we see? We see a break of market structure right here. We see a break of market structure right here, right here. So now this scenario is exactly the same as this here. Can you see it? Abu.
Yes, I'm with you. I'm with you.
Okay, cool. So I was saying that this scenario here is exactly what we see here. exactly the very same thing here. All right. So what do you do here? You have to find the breaker block. It's exactly where your first entry will be, and then the high of that entry from the breaker block will be there will be a lot of money resting above it. So that means liquidity. Same thing here. You need to find the breaker block, and then the high above that breaker block is it's where the money is resting. So it means what? It means liquidity. So what do you do then? This is what you do. This is your breaker block here. As you can see, price pushed to mitigate what? That breaker block, and then it reversed a just for some time, and then after that it pushed back up again. As price was pushing back up again, where was the target? Now this was the target. This candle here was the target. As you can see, price reversed exactly on the very same candle that I say it was our target. All right. So now, as price was reversing here, let's check the highest candle. This is the highest candle here. Did it break any structure on the left? No. But do we have substructures inside this here? Yes, we do have. Where's that? This is the highest structure here. As simple as that. So this week took out liquidity that was resting above here. So what is this also? This is another stop hand. It is not a break of market structure. So where is the low that created this high? Now this is the low here. This is the low here. This is the low that created this high. That high, I mean. This is the low here. This wrong with my mouse. Okay, yeah, right. Here, exactly here. All right. So now, when you see such things, you do what you did here, and you do also what you did here. The very same thing over and over again. You need to find an order block. Then that will be your first entry, and then the candle that created the stop hunt will be your second entry. Then what do we do? This is your breaker block here. All right. This is your breaker block here. Let me put this thing. Yeah. So what do we know now? After what we did here in the previous scenarios, the very same thing is going to play out here. And then what do I mean by that? This is what I mean now. Above this swing high here, there's a lot of money that's resting here, and then the market, and then the market makers are interested in that money here. So as we see now, US30 as it stands now, as it stands now, US30 is bullish from here. So this bullish move. Okay. Now this bullish move here, something is wrong with my mouse. Now this bullish move here, the real target, the target is not here, but the target is up here, right? The target is up somewhere here. Now we need to be sure now that where exactly is the target, not somewhere, but we want to be sure. Now what do we do then? We will use this rectangle so that our chart will be clean. We will use this rectangle here, right? We'll use this rectangle right here. We must put it exactly on the candle. That is our stop hand, exactly here. So now we can remove this so that we don't have confusion, right? So this is our point of interest here. Okay, cool. Now, since this is our point of interest and this is on D1, what do we do then? It depends on the time frames. Which time frames do you use? Abu, you're gone.
I use 4H and M15.
Okay, H4. Now we are on it. Now we are on H4 then. Then we want to understand now that where will US30 where will it gain the momentum to be bullish, and then when it's bullish, where exactly is the target? Now let's check the current price action. In current price action, this is what we find. What do we find here? It's another inducement zone. Yeah, this is a inducement zone here. Right here, we have this inducement zone here. All right. Remember on H4, on D1 rather, we said this is inducement here. However, on H4 we see another inducement zone, right? Where is that? It's here. So now what do we do? Here we have to mark the specific candle. It is important. You must always mark specific candles, right? So now here we are on H4, the current price action. What what do we see? Now liquidity that was resting above this week here, it's swept now, right? Now we have price above this previous high. Now that liquidity has been taken as we speak now. Where is the target then? The target is up here. This is second inducement zone, and then the third target is up here, right? The third, this is now the point of interest, but 1, 2, these are just inducement zones, right? But up here is the target. So on the target, you need to mark exactly where price is likely to reverse. You need to mark exactly where price is likely to reverse. Then what do we see on H4? We still see the stop hand. We don't have a break of market structure still, right? So now what do we do? Since you said use H4 and M15, now we go to your M15. This is for entry now, right? So let's do this. Let's start with the target. Where is the target? Even on H4, we see the very same thing. Stop hand. There's no break of market structure still, right? So now on M15, what do you see? We see this now. It's a failure of market structure, right? That failure of market structure, it was confirmed down here, right? That failure of market structure, it was confirmed down here. And then this is the first entry here on the failure of market structure. This is the first entry here. As you can see, price already came to mitigate what? This is the breaker block here, right? After the breaker block, now you have to come to the order block. There's a breaker block and an order block. Now, what do we see here? I don't like to force things. I want to put things exactly where they should be. Do we have a mitigation or not here? With what you see on the screen here. Do we have a mitigation or we don't?
With that week, there is mitigation.
There's no mitigation here. Look carefully.
Okay. Okay, that which didn't touch.
Yes, there's no mitigation here. So what?
Yes, that.
Yeah, no, it did not touch. So what do you do if things are like that? You extend your rectangle to your right. You don't have to panic at all, at all. You don't have to panic. Again, when price pushed up to here, it did not touch there again. So what do you do? Keep on extending your rectangle to above the current price action. All right. Uh, you, you need to extend your rectangle to above price action all the way up, all the way far, like very, very far above the current price action. Okay. Current price action here. All right. So now let's go to where everything originates. It originates right here. Okay. Mark that specific candle right here. So when things like this happens, sometimes we give it a benefit of a uh, when the news are released, the spread is always the spread will always widen. Always the spread will widen. Always when the news are released and when the session starts. So because of that, then this, depending on the broker again that you are using, this might have been the mitigation here. All right. So now this is the target there. Price must come and tap here. And then from here, what then happens from here? You need to go back to D1, right? So on D1, what we have? We have a stop hunt now. This is the setup for an intraday. So now, when price tap here, we expect price to drop after that, right? Why here we see price tapped into this candle here that created the stop hunt, and then after that it dropped, and then we're expecting what the very same thing to happen here, right? So now we now know that D1 is bullish. Now on M15, because we identified those important zones on H4 and D1, right? On M15, let's look at the current price action on M15. You will notice again that I did not remove all the markups, right? Now, this is now M15, right? So in order for you to understand exactly where you expect the break here, there's a PDF that speaks about all these things, the entry types. Now, we have to come to this where the liquidity zone starts. It is important. Please note that you have to come to where the liquidity zone starts, right? And then find out what do you have there. So if I can ask you now, what do we have here? We have a failure of market structure here, like this, right? We have a failure of market structure, and then that failure of market structure was confirmed where? Was confirmed here, right? This is the confirmation of a failure of market structure. As you can see, we have a break and immediate mitigation here. We have an immediate mitigation right here after that price dropped. And then as price was dropping, now we have the unmitigated point of interest. And then where is that? This candle here. So, in order for us to save time about drawing this rectangle, let's just put the horizontal line exactly where that candle is, exactly here. So now anything above 32,1950.46 with a candle, then that will be a break of market structure. right? And then we'll have to do what? We'll have to buy US30. Let's go to the current price action. What do? We said anything above this 32,950.446 will be a confirmation of a buy. So now what do we do if things are like this? We don't do anything until we see a break here. Now, when we see a break, what are we likely to see? This is what we are likely to see. Price will push up, right? And then it break that price. Let's say it's here, right? And then after that, price will come back to mitigate a breakup block somewhere here. We are not sure exactly when. And then after that price, after that US30 will be bullish again. This is what to expect on US30. And then as price will be bullish, when you then get your entry, where is your target? Then your target is the inducement zone or on H4. After taking it by here, your target is in this inducement zone here on H4, right? And then where exactly in this inducement zone, it's up here, this unmitigated candle here. This take profit one, 33,524.63. And then a break above 33,577.39. And then the very same entry method that you will use here, the very same entry method that you use, you use the very same entry method above this zone here. So there's two inducement zones on H4. They are both acting as a trap, right? So price will buy from there. Price will not drop, it will buy. D1 says buy, H4 says buy, M15 also must buy. So you cannot go against the bigger time frame. As simple as that. This is an intraday setup. And it ends right there to analyze. Any question from your side? Abu? Any question from your side, Abu? I don't know what's wrong with your microphone. I can see you saying something, but I cannot hear you.
You said, I'm with you, please.
All right, yeah. I was saying I'm done with analyzing this US30 for intraday setup.
Oh, okay.
Okay. Any key points that you took from this?
Yeah, the key point is that if we have the candlestick, if we have a candle, any candle that broke above, let me check the points. Then we have a bullish market. 32,950.46. Then that is a bullish market.
Okay, yeah, sure.
So I got that one very clear.
All right, no problem.
Thank you so much. I would like to suggest when next there is class, let's make it night. Right now that I'm talking to you, I'm inside my shop. So as I'm listening, I'm also doing I'm also doing my daily job.
I did not get
I
that.
would love, I said I would love if any class that is coming up next to be at night, not during the day.
Oh, okay. Yeah,
Night will be more, you know, so that people won't get much disturbance like that.
yeah, it depends again on my schedule, decide how busy I am.
Yes, I understand. I
Yeah,
understand.
yeah. All right, all right, man, no problem then. Attend to your customers in your shop that side, and then we'll talk then.
Okay, thank you so much. I will record the video again.
Okay, yeah. I will share this video with everyone then.
Oh, okay. Thank you so much.
Okay, sure.
Uh,
Bye. Sure.
Bye.